The 2008 financial crisis, also known as the Great Recession, was a severe global economic downturn that began in 2008 and lasted until around 2012. The crisis was caused by a combination of factors, including the collapse of the housing market, the subprime mortgage crisis, and the failure of large financial institutions. At the heart of the crisis was the widespread use of subprime mortgages, which were given to borrowers with poor credit. These mortgages were often bundled together and sold as securities to investors, who believed they were low-risk investments. However, when housing prices began to decline, many borrowers were unable to keep up with their mortgage payments, leading to a wave of foreclosures. This, in turn, caused the value of the securities to drop, leaving many large financial institutions with huge losses. This led to a chain reaction, as these institutions began to fail, triggering a global financial panic. The crisis had a severe impact on the global economy, with many countries experiencing sharp declines in GDP and high unemployment rates. The crisis also led to widespread public anger and mistrust of the financial system, as well as calls for increased regulation of the financial industry. In response to the crisis, governments and central banks around the world took a number of actions to stabilize the financial system and support economic growth. These measures included providing large-scale financial assistance to banks and other financial institutions, cutting interest rates, and implementing fiscal stimulus packages. Despite these efforts, the recovery from the crisis was slow and uneven, with many countries still struggling to return to pre-crisis levels of economic growth and employment.